We're talking Amazon. This has been a favorite from the analyst community so far in 2023 as profit margins increase, growth stagnated as far as the cloud business goes, but now starting to ramp back up. Shares are up over 82% so far in 2023. Alex, give me your take here on Amazon. It seems like this is almost another one of those stories like Facebook and Meta had with Zuckerberg coming out, year of efficiency. Andy Jassy from the CEO of Amazon has been doing the same thing, and that's why their margins, operating margins, are starting to expand a little bit. Profit margins are starting to expand. The retail side, they're making money on the retail side. I know that's a big chunk of their revenue, but to make money on that in such a low margin business is definitely beneficial when you've got AWS as the growth driver.
Yeah, and Amazon's always been a company that's willing to sacrifice the now for tomorrow, right. Kind of a situation, where, the first, 15 years of the company as a major player in markets, it was basically just breaking even, right, knowing that it had that profit spigot it could turn on. Now, I'm in the camp that I, at some point in the future, would like to see AWS and the Amazon e-commerce business two separate stock tickers, so you can be a little bit more targeted with your investment. It's really difficult, I think, with this particular name to really put your thumb or finger on how it's going to do, because those businesses are just so different. Right. Now, with that allows for some resiliency in different market environments. It's an industry leader in both cases, but there's very little overlap between the two. So it just kind of, in some ways, I don't want to say it's making a mistake, but one of the things that's really hampered and dampened performance over the last decade of some of those old school legacy tech names is they're just too big and they have too many things that they got going on. Think of General Electric, think of IBM and some of the other names. They try to transition going forward. Right. They had to kind of focus and refocus on kind of siloing out their businesses and not being too extended through kind of this conglomerate idea. Now with Amazon though, there's a couple things that I think are positives. Now, one, it helps that it's a Magnificent Seven name, and while I still think that the primary risk that faces equity markets is a rotation out of those names, it's hard to put your I guess, comments that Amazon is an overbought one, or is one that is overbought by valuation being extended or overbought by making new all-time highs. It's well off its highest levels. It's about a $3,000. $3,060 would be its kind of pre-split adjustment to kind of think back to the old prices that we used to remember, and it peaked out near 3,800 or so. So we're still way off of all-time highs. But even if you look at like a forward PE, it's like sub 35. Historically, over the last year, that would be low. Over the last 5 years, it'd be very low. So some of this is the growth rates have come down, sure. But also a lot of this is that Amazon just hasn't been NVIDIA. It's been a comeback for Amazon, and it's still got a long ways to go before it makes a new all-time high.
And we mentioned some of the metrics that are improving. Free cash flow, $8.7 billion in their most recent quarter following negative results. Remember, this stock at the end of 2021 was $166. It fell to the low 80s at the end of 2022. So I like to look at as far as a chart goes, always extend it a little bit, because the retail side of the business was getting hurt in 2022, but then also AWS's growth rate was starting to slow a little bit. It seems like they've righted it,